Welcome to the deep dive. Today, we're really digging into one specific piece of stock trading advice. It's Mansi's trading tip, number 72.
That's right. And the core idea, well, it's essentially about patience.
Patience, yeah.
Yeah.
Specifically with stocks that show a really strong breakout on a monthly chart.
Exactly. We're going to explore what that kind of signal, really means
Hmm.
and what typically happens after you see that signal, what kind of behavior you might expect from the stock.
And the potential payoff Mansi suggests might be there.
The potential returns. It's a very focused look at this one market observation.
Okay, right. Let's get straight to it then. So, Mansi talks about a solid breakout on a monthly time frame. When we see that, what's the immediate takeaway? What's it telling us?
Well, a monthly breakout, that's quite a significant signal. It's not just a daily fluctuation. It represents sustained buying pressure, enough to overcome, established resistance levels over a pretty long period.
Right. So it's not just a quick jump. It implies something more fundamental is maybe shifting.
Precisely. A shift in market sentiment towards that specific stock, viewed over weeks, even months. It suggests underlying strength.
Okay, building on that, this idea of a sustained move, Mansi then says, be patient. Mentions the possibility of 1 to 3 slack months, even after this strong break. What's going on there? Why the pause?
Yeah, that's interesting, isn't it? These slack months, there are likely periods where that initial excitement, the energy from the breakout just cools off a bit temporarily. The stock might consolidate, meaning the price just trades sideways for a while in a range.
Or maybe even drifts down a little.
Or it could pull back slightly, yeah. Some early investors might decide to take profits, which is perfectly normal. It's just, it's part of how markets work, right? Even the strongest trends, they rarely move in a perfectly straight line.
Yeah, that makes sense.
But the key part of Mansi's insight here is the expectation that this pause, this slack period, isn't necessarily the end of the upward move.
Right. So even after we see this really promising sign on the big monthly picture, we shouldn't be shocked if the stock just takes a breather.
Exactly.
It's almost like the market needs to sort of catch its breath and get used to the new price level before maybe pushing higher again.
That's a good way to put it, yeah. Market
Yeah.
digestion. And lots of things can contribute,
Yeah.
The overall market mood, maybe some news specific to that company's sector, or just the natural back and forth of buying and selling in the shorter term.
Mm-hmm.
But the core idea from Mansi
Yeah.
seems to be that the underlying strength that caused that big monthly breakout, well, that's expected to eventually kick back in.
Exactly. And that's where the tip says, despite these potential slack months, the stock will eventually go up. It suggests that initial long-term signal, the monthly breakout, is maybe a more reliable indicator than these shorter bumps in the road.
Precisely. It's about recognizing that these longer-term trends, the ones you see on a monthly chart, often have more staying power, more than short-term volatility might make you think. It encourages you to focus on that bigger picture rather than getting too worried about the day-to-day or week-to-week noise.
Okay. And the reward for having that patience, for riding out those potential slack months. Mansi points towards more than 20% return within a year. That's quite compelling.
It is, yeah. And if you think about how this fits into maybe broader investment strategies, Mansi's tip kind of aligns with identifying fundamentally decent stocks that are clearly showing upward momentum over a significant period. And then, crucially, giving that trend the time it needs to actually play out.
So it leans towards quality and patience rather than trying to perfectly time every little market swing.
Exactly. Less about hyperactive trading, more about identifying a strong setup and letting it mature.
So for you listening right now, what could this mean for how you look at potential investments?
It's a specific way to view charts, isn't it? It suggests that a really strong signal on a higher time frame, like monthly, could be quite significant, and that maybe those temporary dips after such a signal, well, they might just be part of the journey.
And it brings up a question for your own approach, really. How much importance do you currently place on these longer-term monthly patterns when you're evaluating a stock? Mansi's tip 72, suggests they could be really valuable indicators. And maybe understanding this potential for consolidation for these slack months after a breakout might help you avoid, selling out too early from something promising.
Okay, so let's try and wrap this up. Mansi's trading tip 72, it really highlights the significance of seeing that strong breakout on a monthly stock chart. That's step one.
Right, the foundation.
Then it prepares you for a potential pause, maybe 1, 2, or 3 slack months where things might seem to stall or even dip a bit.
That expectation management is key. But the core of it, the main message, is the expectation, or maybe the probability, that these stocks are likely to get going again, to resume that upward trend, and potentially deliver returns greater than 20% within the next year or so.
Mm-hmm. The patience pays off, potentially.
So the big takeaway seems to be pay attention to those big long-term signals and maybe cultivate a bit of patience. It could be a really valuable approach.
Absolutely. And that brings us maybe to a final thought for you to mull over. How might actually incorporating this perspective, thinking about monthly breakouts and the possibility of slack months, how might that actually influence your own strategies, both for, say, evaluating a stock's performance and also for thinking about the timelines you expect for your investments?
Yeah, could looking through this specific lens reveal opportunities you might have otherwise missed?
And how might it change your own tolerance, your own feeling about those inevitable short-term price swings? Something to consider.